Hello, everyone. Welcome back to the Daily Gold Podcast. Thank you so much for tuning in today. In today's edition, I have another CEO interview for you guys. With me today is Darcy Marud. He is the president and CEO of Western Exploration, a relatively new exploration company, very intriguing company operating in Nevada, the #1 mining district in the world. And Darcy, as we get started here, can you provide our listeners a quick background and introduction of the company? And also, can you mention the company's current market cap and cash position?
Yeah, of course, George. Hey, and thanks for the opportunity to speak with you and your audience today, Jordan. I really do appreciate it. So, Western Exploration Inc., as you said, Jordan, is a relatively new publicly listed company. It was listed on the TSXV in 2022 and on the OTC shortly after that. WEX.V is the symbol. Currently, our market cap is somewhere between the 40 to 45 million Canadian range. And we have a treasury of around 3.5 to 4 million Canadian. I mean, that number moves around, but it's somewhere in that neighborhood. And that's on the heels of a financing that we just completed last month, where we raised about $4.6 million for the company.
Okay, Darcy, let's talk about the overall project and specifically the two resource areas that you have. It's interesting that you already have a resource at these two areas, yet there's also exploration potential at both. Let's start with the oxide project first.
Sure. No, of course, Jordan. So, as you said, we have two resource areas, which I think is unique for junior exploration company. We have one contiguous project called our Aura project, where we have at least two resources already defined independently of each other, and both probably standalone projects going forward. The one you mentioned, our oxide project, is called Dobie George. It is a project that was defined by Homestake originally in the late 80s. We acquired it in the late 90s. We've done approximately 20,000 meters drilling on our own, but there's over 120,000 meters of drilling completed historically on the project by previous operators and Western. It occurs right at surface, so it outcrops with very high gold grades in excess of 5 grams per ton locally. The current resource that we've defined is about 550,000 ounces at approximately 1 gram per ton. But we think we have upside to that grade, and we demonstrated that last year with some diamond drilling that we did, where we were intersecting wide intervals, continuous intervals of over 40 meters up to about 70 meters of about 2 gram per ton oxide right near surface. So it is a very high quality at surface oxide project. It's been delineated by a lot of drilling. Metallurgical work in the past indicates that it is heap leachable, open pittable, with recoveries of between 70 and 75%. So I think it's a pretty straightforward project. And given our market cap of about $40 million, as we move this project forward through a PEA and ultimately a pre-feasibility study to be completed by the end of 2024, we think we'll demonstrate that that resource area alone is worth more than the current market cap of the company today.
Okay, Darcy, thank you for that info. Just to follow up on Dobie George, so about 500,000 ounces. Realistically, how much bigger can this project get? What do you think the potential is?
Yeah, on the oxide, I think realistically we could get to maybe 600,000 to 700,000 ounces. I don't see a pathway for more than that right now with what we know about the project. Certainly, with additional drilling, maybe we increase that, but it is wide open at depth. And at depth, it will go into sulfide mineralization. But with the grades that we're talking about and we're seeing below the open pits, certainly that sulfide mineralization would be amenable to flotation and would be a good complement to the next resource area we'll talk about here shortly, which is our Gravel Creek deposit, which is sulfide.
Okay, thank you for that. And thank you for mentioning Gravel Creek. You did the transition for me. You made my job easier.
Had to help, Jordan.
Yeah. Okay, so please give us a background of Gravel Creek.
Yeah, certainly. Gravel Creek was a discovery made by the company. Just a little bit of background about the company. It's been around for about 25 years. It was private for the majority of that time and being public only for 2 years. But we did a lot of work as a private company. And in 2013, they discovered the Gravel Creek deposit through drilling based on the Wood Gulch deposit, which was mined by Homestake in the late 80s, early 90s, and is only about 1.5 kilometers to the west of Gravel Creek. So we interpreted the geology, stepped out with a drill, and found the Gravel Creek deposit on the first hole. And so that deposit right now, after about 85 drill holes, is totaling between 750,000 to 1 million ounces, depending on the cutoff. 1 million at 2-gram cutoff, 750,000 at 3-gram cutoff. But it's a very good resource of about 20 meters true width, and it's open in most directions still. And we'll talk a little bit about our drill program coming up this year, where we hope to extend the mineralization off to the northeast.
Okay, before we get to some visuals of the deposit and information on your upcoming drill program, can you talk about the grade and why this looks to be economic for an underground deposit? And maybe you could also talk about the continuity and mining widths and things like that, because I think this is very important information for the audience to understand.
Sure. No, happy to, Jordan. So I think you hit the nail on the head that grade is one component of making a deposit economic. You also need to have the continuity, as you said, and width is very important. The width of the mineralization and the mining method you employ on the extraction. And the mining method comes into play on the cost, right? And cost dictates what your cutoff is going to be and what your ultimate minimum break-even grade needs to be. So we're fortunate at Gravel Creek that we've got very continuous mineralization right now. We're about 600 meters of strike length. The average grade is between 5 and 6 grams per ton gold. But really what works in our favor is the true width of the mineralization is in excess of 20 meters. So that's going to allow you to use a low-cost underground bulk mining method. And that's going to be what drives really the ability to extract 5 to 6 grams per ton underground, is that low-cost mining method. So if we look at right now with the gold price where it is, a gram per ton of gold is roughly $60 to $65 per gram. So 2-gram cutoff implies about $130 per ton in situ value. 3-gram cutoff would be roughly $200 per ton in situ value. So looking at an underground mine where you typically see around $150 per ton, including mining and processing, we're right in that range where we think we've got grade that can be economically extracted at that 5 to 6 gram per ton range, given those costs.
And Darcy, just off the top of your head, do you know of, or can you think of similar deposits where they were mined underground, the grade wasn't terribly high, but they were very profitable and they worked?
Yeah, of course. There's numerous examples. You know, one of the ones I'm most familiar with is El Peñon. I was fortunate enough to be part of the team that was there when El Peñon was discovered. Early in its days, El Peñon was known as a very high-grade gold-silver mine. But today, if you look at it, its true mining width is about 3 meters, and the average grade is about 4 grams per ton gold and about 100 grams per ton silver. And it's being, economically extracted at this point. Another opportunity that I'm familiar with is Malartic. Malartic, people might say, is an open pit. What are you talking about? But as it transitions into the underground portion of the deposit, which is Odyssey, Goldie, and East Malartic, the average grade there is going to be about 3 grams per ton gold. But given the wide widths and the infrastructure that's in place, 3 grams per ton is going to be economic in that place. So I think it depends on a lot of things, your operating costs, the width of the mineralization, and your infrastructure that's in place that will dictate what your break-even cutoff can be.
Okay, Darcy, now let's pull up some visuals so the audience can get a look at the project in the scope of the mineralization and potential as you describe it.
So this is just a look at the Aura project itself, Jordan. You can see here in the yellow outline, that is our project. It's about 61.6 square kilometers of contiguous claims. The Dobie George deposit to the far left, outlined in red. The Gravel Creek and Wood Gulch to the far right, also outlined in red. To the top of the slide, you can see our Mountain City office. It's about a 30-minute drive from our office to the project site. And that black dotted line that follows that road access is a grid power line. So we've got power coming to within about 5 kilometers of both Dobie George and Wood Gulch Gravel Creek. The yellow dots, there's one near Dobie George, there's one near Gravel Creek, are permitted water wells that the company has permitted in their name. We currently use those for water for our exploration drilling, but certainly going forward as we go into development and production, we can expand those well fields and use those for development and production as well. So on this slide, it's just here to demonstrate, all of the infrastructure that's in place for the project. We know that infrastructure goes a long way to helping a project become economic. I think with the road access, the power nearby, the water wells in place, and the resource areas that we've got a very good project here with all infrastructure in place. So looking at the Gravel Creek deposit first, this is just kind of an oblique. The colors on the bottom are our geophysics, it's density. So the density is really showing the controlling structures. You can see them trending off towards the top of the slide. On the left-hand side for the Saddle Southeast deposit, that is the Thomasina Fault. Fluids have accessed that and formed the deposits. The one at Gravel Creek, you can see looking down on it, there's a very strong northwest trending structure that hosts the Gravel Creek deposit. Interestingly, all of the deposits, both the Wood Gulch and Gravel Creek, are connected by a northeast structure you can see there in red. The red and the blue colors are mapping, the contrast is mapping those feeder structures. So if we look at the section, just tilting it down, you can see the mineralization, how it's controlled by those structures. Gravel Creek has the most drilling along the structure, so it's very evident there in red. You can see that's the resource. It comes up the feeder structure, and where it hits the contact, which is the green sedimentary rocks and the blue volcanics on top, is where you form the best part of the deposit. Looking at Wood Gulch, it's identical. You can see the mineralization there right on that contact. And then as it goes down dip, you can see that other fault that has very limited drilling on it at this point. But we do believe that additional drilling on that feeder structure at Wood Gulch will turn into another Gravel Creek type system. At Gravel Creek to the right, you can see where it says alteration plume. We have multiple high-grade intersects up there called the hanging wall veins. Those are very high-grade, plus 30 gram per ton hits locally with kilos of silver that are wide open to the northeast. We do think that that deposit has a northeast control. It would connect the Wood Gulch deposit to the Gravel Creek and then extend it for about 2.5 kilometers to the northeast. The drilling that we'll do this year will be testing that T4 area, which are the hanging wall vein and flats. The reason we're testing that this year is we have numerous high-grade hits there that if we're successful with the drilling this year, we can connect those up to the Gravel Creek resource in the short term. At the gap zone, which is that T3 between Wood Gulch and Gravel Creek, we will be doing additional geophysics in that area this year. That will be used to provide better drill targets in there. You can see that there's only 3 holes right now that outline that gap area. Right at that contact between these green rocks, which are shown here, which are the underlying sediments, and the overlying rocks, which are moved here so that you can see this, which would be the volcanics. Right at that contact, we're getting up to 10 or almost 11 gram per ton gold and over 300 gram per ton silver. That contact hosts the mineralization of both Wood Gulch and Gravel Creek. And these are the only 3 drill holes testing that contact between those 2 deposits currently. So there's about 1.5 kilometers of strike length and 1 kilometers of width that remains to be drill tested going forward. Ideally, as we do that drilling, you will see the Gravel Creek mineralization, which is on the right-hand side of this slide, moving up dip and connecting to the Wood Gulch deposit, which is right at surface. Looking more at the Wood Gulch or the Gravel Creek deposit, you can see to the northeast or to the right-hand side of the slide, the high-grade vein hits that we're getting. That's the next slide here. And you can see those high-grade hits that are up to 40 gram per ton gold and over a kilo of silver. Those are not in our resource, similar to the gap holes that are not in the resource. So the area around the deposit, there's 1.5 kilometers between Wood Gulch and Gravel Creek, and there's 1.5 kilometers from Gravel Creek to the northeast that have drill intersections in them above economic cutoff, but aren't in the current resource due to a lack of drilling. This year, this area that you can see here by Gravel Creek to the right of it, That's where we'll be doing the drilling in the summer of 2023. It will be with orientated core so that we can then learn the true direction of those veins and connect them together back to the Gravel Creek resource. We did drill one hole in 2020, hole 450. In orientated core, it indicated that the high-grade veins, which were up to 37 gram per ton gold, are trending northeast and not northwest like the current resource area. So we believe that that expansion potential to the northeast and the connection between the Wood Gulch and Gravel Creek deposits in the gap area imply a strike length of about 7.5 kilometers, and that area through additional drilling could potentially increase the resource from the current 1 million ounces to an excess of 3 to 4 million ounces. That is our goal over the next 24 months. Looking at Dobie George very briefly, we know that the resource is well defined by drilling. You can see the drill holes there in black. The gold areas are the intercepts above 0.3 gram per ton in the resource model. So you can see there's a lot of values below the current open pit. A lot of them remain wide open to depth. The drilling has never closed off the deposit. And if you look at the next slide with the resource blocks, you'll even get a better impression of how wide open that deposit is at depth. The area around Blizzard Point is oxide. That can be drill tested to increase the oxide resource. And below Westridge and Daylight, we are getting into sulfide mineralization. But given that Gravel Creek is a sulfide opportunity, this would be additional resource in addition to what we have at Gravel Creek. So Dobie George offers us the opportunity for a near-term open pit heap leach project, but longer-term sulfide potential to expand the current sulfide resource on the Aura project. We would estimate that the deposit has the potential to double in size if we follow it down dip, as it is currently not closed off. So in summary, why Western exploration? We are in Nevada, which is a high quality mining jurisdiction, one of the best ranked mining jurisdictions in the world. But not only are we in Nevada, we're just north of Elko, Nevada, off a paved highway. So we're nearest the biggest mining center in Nevada, which is Elko. We've got an experienced improvement management team. We're all exploration geologists. Our VP of Exploration, Mark Hawksworth, previous to joining us, was the Director of North American Exploration for Yamana. John Cleary, who's our Senior Consulting Geologist, has been with the project since the late 1990s. So he knows the infrastructure and the project very well. And previous to me coming to the company in 2018, I was the Executive Vice President at Yamana, overseeing project development and exploration. So we've got a team here that's been involved in a number of discoveries across the Americas that total in excess of 20 million ounces of gold and several 100 million ounces of silver. And that team has been involved right through grassroots discovery all the way to putting those into production. So I think we've got a team here that's proven in the past that they can get things done. The resource base we've got is current. It was completed in 2021. It's about 1.3 million ounces of gold and open for expansion in all directions. The Gravel Creek discovery is a brand new discovery. We don't know how big this thing gets yet. As we demonstrated in the previous slides, there is drill holes all around it with above economic cutoffs rate or economic cutoff grades right now that aren't in the resource. So it gives us immediate targets to follow up, whether it be the gap or that northeast extension. We know that the drill holes in there already have economic grades, and it's just going back, following those up, connecting the dots and adding them to the resource. Dobie George, very different beast than Gravel Creek. It has been well defined by drilling. There's over 800 drill holes. Metallurgical work is being done. We're currently completing additional metallurgy to support a pre-feasibility study right now. And as we complete that pre-feasibility study towards the end of 2024, we think that the resource in the Dobie George project will demonstrate a multiple to our current market cap. So we think Dobie George alone right now is worth the current market cap of the company. Expansion drilling, we've got multiple areas between the two deposits, around the deposits, where we can continue to do drilling up until 2029, and that is when our permits would need to be renewed. So we've got at least another 6 years in our permits where we can continue to do drilling and continue to grow the resource. So that's kind of a summary technical review of the program coming up and why we think that we can grow the resources at Gravel Creek significantly and advance Dobie George to that pre-feasibility study in the short term.
Darcy, just one more question for you as we close. What kind of budget do you have as far as capital for the drill program and meters being drilled?
Yeah, we're going to be spending about $2.5 to $3 million in the ground this year, including geophysics, metallurgy, and the pre-feasibility or the PEA. We'll start a PEA at Gravel Creek that will lead to pre-feasibility study, and we'll do between 2,000 and 2,500 meters of drilling on the northeast extension of Gravel Creek. That will be starting on July 10th, and we'll be going right through until probably the end of October.
And finally, Darcy, our listeners and viewers, if they want to follow up with you and get more information, can you tell them where to go and how they can do so?
They can go to our website, www.westernexploration.com. But we're happy to talk to anybody that wants to reach out to us. Nicole Cowles is our Director of Investor Relations. She can be reached at NicoleCowles@westernexploration.com. And I'm happy for people to email me directly at dmaroon@westernexploration.com as well, Jordan.
Okay, Darcy, thanks so much for coming on today. I and my audience, we really appreciate it, and we thank you. And hopefully we can do this again. We can follow up in the coming quarters and see how your exploration is progressing.
Jordan, happy to be on a call with you today. It's always a pleasure. Stay well, and thank you for letting us speak to your audience today.